Just don't provoke me, cause I don't need no cellmates. I'm in a two-seat, doing drops like a mailman. This ain't no hoopty, ass she riding, she's a hell yeah. No, I won't lose sleep about no pussy, I'm like farewell. Yeah. I'm outside. I know how it feel to see your homie switch sides. I know how to put that Rolls Royce shit in drive. I know how to load a clip and shoot, we gotta ride. You ain't gotta lie to me, baby, no. You know it's a vibe every time we catch him off sides, he won't make it, no. Money on my mind, I can't get it all.
I've been outside. We're inside True Pod Studios here in Garfield, New Jersey. Welcome back. That's right. You see us in here. You see my man John. You see Kenny. And who's this right next to us in the hot seat? Or maybe cool seat, man. This guy's a cool dude. You can check him out on IG, Got Mortgages. We're going to learn a little bit more about him. My man Abdel. Welcome. And first, I'm going to go ahead and go to John and introduce the whole crew in here, man. I mean, what are we doing?
I'm testing the mic right now to see if it works. That's it. That's what I'm doing first.
Just making sure it's connected, right?
Yeah,
it's connected. It's on.
That's my man. That's my man.
Uh-oh.
Make sure.
Mikey right here, because he don't know if the mic is on one day or not. To shoot a whole episode, shit would just be off.
Really?
Yeah, one day they're going to forgive me for that, you know?
No. I don't think so, nigga. You know that? Waste a whole hour of my life here, nigga.
Yo, I still got the episode there, and just every once in a while when I just want to be on super point, I just take a look at that.
So what, you're just assuming what we're saying?
No, I'm just trying to read lips, and maybe I can transcribe the damn episode at least.
Yeah, it was a good time. Good time to be alive, right? That was earlier in our process that
Yo, we didn't know nothing about podcasting.
Yeah.
Well, he did. So he's a real podcast engineer. Like, funny little story, I thought he was a cab driver. For real. Swear to God. Came up to my house.
I thought he worked for the CIA.
He came to my house in one of the most, I think the most polluted Civic there is in New Jersey.
Yo, why you messing with me?
Yo,
bro?
polluted. Fucking
Look, alternative facts
flames
are
and
not
everything
facts.
come out the back.
Listen,
He pulled up and then he grabbed one of the I guess
The reason why we met.
Yeah, the reason why we met. So we was gonna close a big deal in Cali. It was like almost 100 mil, right? No joke.
Mm-hmm.
And thank God it fell through. Rest in peace, Pat. And everything happens for a reason, because
100%.
I feel like I met Pat because to introduce me to Al. Al's like our brother now. It's not even like he's our fucking brother. That's it.
My brother.
He does everything. He's in our house. He's whatever. Like he's with everything. Now he actually works full time with Truthful Taxes, not only as an engineer, but this year he's going to be doing support for 40 plus around the U.S. So, I met Pat. Rest in peace. And I think the reason for that is, to me, Al. But he was a certified cab driver when I met him.
Certified, bro, all the way.
Yo, so I go to Cali, right? There, I go to Cali to see Pat, and we, the whole team fly out there, and I'm like, yo, that fucking dude look familiar, bro. Yeah. Oh shit, that's the cab driver from New Jersey, right, Al? When I see Al, I was like, yo, you drive the cabs? He's like, no, I'm not a cab driver, bro. He's like, I'm an engineer, podcast engineer. I was like, oh, I got you. My fault.
I love it.
And then once we flew down, we exchanged the numbers, and then
It's been it, man. It's a blessing.
But this is like his studio. Like he feels really at home court here, right?
Of course, bro.
Yeah.
Man.
But this is the most informative podcast that he's ever been a part of. Why? Because he was a part of the Boxing Voice. You're talking boxing, all right? Over here, people don't understand that we can get anybody we want in this place because taxes relates to every single person. You could be cool, you could be a rapper, you could be weird, whatever, it relates.
Yep.
So he's over there in the corner just like this.
Yeah, there's times I have to like let him know, like hit the camera.
He forgets because he's so in tune to the info that he be like this.
Oh, sometimes I feel like an octopus out here.
Yeah. I tell him like, because it's so much information and a lot of stuff he knows, but then once we go in depth, he's listening, he's learning, just like the viewers are.
Yeah.
Oh yeah. I it's so many times that I just become the student, and I start to get deep. That's when John tries to sucker punch me with his little jabs, jokes, and shit that I'm not ready for at times.
I think that's how initially it started, where he's the engineer, but he's on mic, right? And it's because while he was listening to our conversation, his questions were so organic because he's like learning on site.
He's in it.
And it just became part of the conversation, and we're here now.
Now we're here. We're Abdel, bro. I mean, come on, man. Let us know a little bit about yourself. What you are, currently into right now with Truthful Taxes, and I mean, I'm hearing welcome to the family, and tell us more about it.
He went through a 6-month interview process with me. As I was telling him earlier before we started the podcast, was we have such an extensive network at Truthful Taxes with all our clients, all our tax partners, and all their followers. I got to be very, very careful who I bring into the family. You know what I'm saying?
100%.
And because we've been burned pretty bad before, I'm a little scarred. You know what I'm saying? So, I was testing him out, get him on a Zoom. Like, all right, he talks good. Cool. I didn't say he looked good or nothing like that. I know you see. Chill out, bro. Nah. So, I was testing him out, and then I had a couple people go through him, and I was like, all right, this is good. I could bring him into the company. You know what I'm saying? So, I'm super happy to have our new mortgage partner, Abdel in the house. Prime Mortgage. We live, by the way, guys. We live on Instagram right now.
I love it.
To everybody on Instagram, what's up, guys? How you doing?
What's going on?
All right. I wanted to show you just a little bit of how it goes on in this podcast. You're actually seeing it live. All right. So you might hear some shit. All right. Bear with me. All right. But we're not going to shoot the whole thing.
No, I love it. Well, so I'll start off. So again, Abdel Khawatmi, owner of Paramount Residential Mortgage Group, got mortgages. We're based out of Eatontown. We also have 4 satellite offices: Jersey, PA, Florida, and Michigan. Actually, in Detroit.
Michigan.
Yeah.
There's like 4 people over there, right?
Dude, that market is wild. So I kind of fell into it about, I would say, almost 6 months ago. A retired NYPD officer who bought a house with me here in Jersey was looking to cop a investment property out there.
Cop? You could tell he grew up in some side.
It's Jersey, baby. It's Jersey,
You're
baby.
a Jersey guy, right?
He copped it.
Yeah, cop. Yeah.
So hit me up. Nobody was giving him the time of day.
Right.
It was a $75,000 purchase. Nobody was giving him the time of day. So he came to me, ran through the numbers. I never look at a client as a dollar figure perspective, right? And police officer opening the network for that. Long story short, we got it done 16 days.
16.
Yeah, 16 days.
Conventional?
Conventional investment property.
That's crazy.
So we move. One of the biggest things. So
usually it's 30 days, 45 days for
That was my
conventional
question.
loan.
I've been with the same company ever since I got into the game.
Right.
And which says a lot because we know how real estate mortgages, everyone's bouncing.
Yeah.
And it's 100% the company. I attest to them and the success that we have, but it comes down to the systems in place, the partners.
So I guess a very important question, right?
Mm-hmm.
You're not the broker. You're the lender.
So we're a direct mortgage lender.
Got it. Got it.
Brokers, awesome models, right? They're obviously they have their success. I think they're at about 10 or 15% of the market share. Direct lenders are 85. And it used to be a lot less, but obviously when rates
direct lenders are 85 of the market,
maybe even more. Even more. They used to be always 90, 95.
Yeah.
Rates trickled a little bit. If you're a direct lender, sometimes you use strategic avenues to make sure that you're also competing simultaneously, which we do. But, again, I never talk ill about other business models. We talk about ours. And, you know what, man? We crank away. Everything is truly in-house, too.
He's going to get put to the test this year, you heard? With 440 partners across the U.S., he's going to get put to the test,
I have a question regarding that particular client. Right?
Yep.
We've all purchased homes, and 14 days for a conventional loan is pretty much
well, you'll see some of my reviews. The fastest I've ever done was 3 days.
Wow.
Helping a client from
is that just a perfect storm when we say great client, great financials, credit, all that great stuff, plus all your expertise and all your services on this side?
It's a combo of everything. So first of all, I'm not issuing pre-approvals without grabbing clients' financial documents and fully vetting them.
Okay. Right.
There's no hey, I make 100, great. Shoot me over your W-2s, pay stubs, and driver's license. I don't need anything else.
Right.
When a client starts getting a little lackadaisical to giving me documents, that's a flag in my playbook, right?
Mm-hmm.
When we're working with partners, obviously on the financial side, it's easier to be accessible to those tax returns, easy being accessible to that information. So we do a full-blown vet. Now, the way I became successful is I know how to do from the marketing perspective, the processing perspective, the closing perspective, the underwriting perspective, and then obviously we're Jersey guys, so it's sales all day.
Yeah.
Right. But until I dove heavy into ops and processing and learning,
You said
what
ops?
is
Operations. I got you.
And learning what is it that an underwriter is looking for, right? And we're learning every single time. You know, we're blessed. We do a lot of business every single month consistently, but every single transaction, you're like, I got to ask this. All right,
You already know the process, so vetting is you're pretty much presenting a finalized package from day one.
Underwriter, ready to rock. So whenever our files are going in, once an offer is accepted, my processor must submit the file to the underwriter within 48 hours.
Okay.
Out of attorney review, not out of attorney review, submit it. Because there could be a hiccup during attorney review that sellers being a little extra, buyers are changing their playbook, whatever the case may be. They just did a waiver of appraisal just to get the offer accepted, and now, you know, they're playing a little. If I come at you, hey, here's a mortgage commitment, ready to rock. That's going to move things along.
Of course.
100%.
You don't give them time to
You can't. So
You
same
don't.
thing.
Once they got that commitment, it's game over.
Yeah.
Same thing when there's inspections, because we all know now, obviously, there's an inventory shortage, you know, supply and demand and all that stuff. But we're starting to see, if I could hit you, bam, mortgage commitment, even if small little nicks and knacks in the home, and say you waived the inspection or you limited the inspection, and I hit you with a commitment, that seller is going to be more than willing to either fix it or offer you a credit, as opposed to, we're still waiting on the bank or we're still waiting on ABC. If I can give the clients that competitive advantage to move quick, all day.
Yeah. Commitment letter. You know, there's several stages to the mortgage process that people do not understand. That they think they have the house. Oh, I was pre-approved. That's zero. That's zero. Oh, you know, I got conditions. That's great, but you need that commitment from the bank, and still with a commitment, it doesn't mean you're all the way through.
Correct.
But that commitment is one of your furthest pieces within the mortgage process that can give you confidence that you don't have to do too much to finish off the loan.
Yeah, so there's three lending processes. So I also own, aside from I also own a mortgage licensing school.
Right. I know you said that. Yep.
So I teach this stuff.
What's the name?
Got Originator.
Got
Mortgages.
Okay, got it.
Originator.
Originator.
So Got Originator for loan originator, right? So I do both coaching for loan officers who are currently licensed, who need coaching, scripting, templates, business planning.
What's the website for that? Just for everyone.
GotOriginator.com.
Perfect.
And then
you hear that, guys?
And then my mortgages is Got.
So if you want to learn how to
become an originator,
become a loan originator for mortgages, he has his own mortgage school, guys. All right, for everybody who want to get in the mortgage space, he got his own mortgage school, and it's GotOriginator.com.
Yeah, and it's
originator or originators.
Originator with an S.
All right, originators with an S.com. All right.
So now the biggest thing, it's licensed throughout the nation. So if you're looking to get licensed in Jersey, PA, Florida, now when you're a loan officer, you're nationally licensed.
What is the toughest state to get a mortgage?
Dude, they're all the same.
They're all the same?
Yeah, I mean, you know, Fannie Mae, Freddie Mac, which is the secondary market, they're the ones that set the rules and regulations for every single bank to abide by, right? We're talking regular mortgages. You know, everyone has to follow. If it's FHA, it's HUD, so it's 56.9 debt to income. Right?
Gotcha.
It's you know, they say
so hold on right there. I'm gonna stop you right there.
Yep.
You're for the listeners who's hearing this right now. You said 56.9 debt to income. Does that have to include the house? So with this, what I'm saying, guys, is all the debt that you have on your credit report that they can see can only equal 56.9% of your total income.
Correct.
So in this case, if it was $100,000, $56,900 is the max amount of debt you can have on your credit report, including the house?
No.
Okay.
So the 56.9, taking it a couple step backs, right? When we qualify a client, right, taking a few steps, there's 4 things that we look at. It's called the 4 C's. We look at a client's credit score, collateral, what they're buying, the house worth, their capital, where's the bread, and is it seasoned? And
when you say seasoned, what does that mean?
So FHA requires you to show the money presentable, seasoned in a bank account for 60 days.
Gotcha.
Right? Unless you sell a house, then we just need to see
the final CD.
If you're getting from your 401k, we need quarterly statements from that.
Right.
If you got an inheritance, it's a little easier, right? We just need to see where the money's
paper
coming
trail.
from, because AML, the anti-money laundering laws, require us to find out where's the money coming from, right?
You also have gifts.
Conventional's 30. So conventional's not as stringent. So now when I was talking about debt to income, the last fourth C, so we said
Well, isn't
credit,
that less if it's 30? Then
what's that? Yeah, 30 days.
oh no
for
no no,
conventional.
I'm thinking about DTI.
It's less
Sorry.
stringent. Less
Gotcha,
stringent.
gotcha.
We said credit, collateral, and capital. Now the fourth thing we're talking about DTI is capacity. That's a C. So capacity is your ATR, your ability to repay the loan, your debt to income.
Gotcha.
So it's based off of your monthly revolving liabilities,
Mm-hmm.
not your, because if you own a whip for $150,000, you're dead. You're dead in the whip.
Yeah.
We don't look at the $150,000
Look at the monthly
balance. We look at the monthly.
Gotcha.
So the easiest way I say it is, say you make 10 G's a month clean. Now, if you're W-2, we take the gross income. If you're self-employed, we take the net income.
That doesn't make no damn sense.
That's actually.
I'm sorry. Sorry, bro.
I mean, listen, man. If we took net,
Bro, you
if we
make
took
10,
net-
you still get 55. If
Yeah.
I make 55 net, this is why I've always heard, now is confirmed, that W-2 income is stronger than self-employment income when it comes to mortgages.
Yep. So there's obviously ways, where like if you're
I'm about to put myself on a W-2.
Well, that's
Yeah,
a conversation
you
we should have off
yeah.
mic, but you should already.
there's strategic avenues. So like if you're self-employed for 5 years,
But not the, yeah, sorry.
you're self-employed for 5 years, we only need, from a mortgage perspective,
1 year of that, right?
1 year.
Yeah,
It's
1
called
year.
a Freddie Mac. Freddie Mac.
So you've been
1
in the
year
porn
program.
industry for
6 months, man.
6 months. You need another. You need
another
another
year
4
and a
years.
half.
No, 4 years is 6 months.
yeah,
In order for them to use your 1 year's tax return.
Well, go back, rewind, because you lost me at porn industry.
So the company that you own, Thrust, right?
Thrust.com.
Thrust needs to do 5 years in the same business
Yeah.
and the same principal code as well.
Yes.
And then they could not use 2 years of average
Can you-
income.
you-
They could
I-
use 1 year from
Exactly.
you.
Yeah.
The current year, though.
That's actually, now that you mentioned principal code, that's important of why.
Same line of work.
Yes, but on the tax side,
Sure.
to have consistency with who you work with and find someone you work with, because accountant could change the code,
Yeah.
and now that can
Mess a bunch.
must up.
Yeah,
but
you can't.
something
you can't
that
be,
simple.
You can't be a truck driver and then you're
Yeah,
artist.
or they put courier and then driver,
Yeah,
or they put
yeah.
long haul freight,
Yeah.
long haul, whatever the case may be,
Yeah.
which is kind of in the same industry. But if you don't know, like, that could throw you off, right? Something so simple like that.
Yeah. So we were talking about it, right? So say you make 10 stacks, right? $10,000 gross.
Yep.
FHA will allow you to have monthly payment liability max of, let's say, 5,600. It's 56.9, but let's just say 5,600. Conventional, same exact situation. Sometimes 49, but for the sake of argument, 45%, right?
So they're a little tougher.
So 100%. Because why? An FHA loan is guaranteed by the Department of Housing and Urban Development. If you do not
The whole
pay,
loan?
the whole loan. And that's why if you put less than 10% down on an FHA loan, mortgage insurance is for the
PMI.
entire length of the loan. Well, it's called MIP,
Oh,
mortgage insurance premium for FHA. PMI is conventional because
Unless you
what does the
refinance.
P stand for? Private. And conventional is technically a private mortgage by the institution itself. So they have to get insured by a private insurer, which would be, Essent, Guardian, NJIC, and all these other private insurance carriers. And they have their own little algorithm too. There's no set PMI calculation.
Right.
Because when I do it, right, when I'm qualifying a client conventional, we're putting less than 20% down, right? So 20% down, talking about that.
20 is not easy to put down, bro.
No.
Most people don't have that 20%, or not even 10%. Most people don't have.
This is a new thing, and I don't want to go too far ahead, but since you mentioned 20%, is this new with the because we're accustomed to seeing 20% for like your secondary home,
Oh,
thing is-
that's automatic on the
right?
second.
On a second,
Right?
but now there's is this a new thing, or has this always been the case where as far as having certain amount of funds for that secondary home.
Yep, reserves.
The
So
reserves.
6 months.
Yo, let me tell you about the reserves.
6
Hold
months.
on.
So
hold
is
on.
that new? Because I've been in
No, it's not new, and
it's-
I
No,
learned.
reserves has been around for a minute on a secondary home. Even technically for an owner occupied.
Yo,
2 to 4
reserves.
unit,
Don't let me
you
lose
need to-
this.
I know. I'm gonna.
Nah,
but-
I need Abdel to touch on this, bro.
I do. That's why I'm bringing it up. But before we get to you is,
Huh.
and I know the industry. There's certain things. I was real estate for 15 years, so
Sure.
I lost my first home, and we don't want to go there, right? We all have PTSD in the real
Yeah.
estate industry. So
In his first business where he was doing porn, it wasn't that much.
I made a
porn
whole bunch
that
of
month.
money, and then purchased my first home. Got into an arm,
Thrust.
right?
Yeah.
Right, super young, 19 years old, whatever.
Yeah.
But we'll go back. Now I do know that there's certain things, protocols that are within the industry. Sometimes are not really used. Is that something that was always around, and now because of the just the market is now being
Are more reserves
So,
being required because of the market now?
No.
All
These rules and regulations.
So let me
have
ask
been-
you
have
something
been
now.
Set in place. There's actually being a little bit more, since we're talking about investment properties, right? And then we'll get back to you. 2 to 4 unit now, owner occupied homes. You can now put 5% down, starting November 18th. So today's what, the 7th. So in less than 2 weeks, right, and a little bit less than that.
owner occupied.
Owner occupied. If it's a 2 to 4 unit property, you could put 5% down.
That's good.
Before, 2 unit was an owner occupied 15.
Okay.
3 to 4 was 25.
Do you think they're doing that because they want more mortgages to be purchased, or
I mean, I think the reality too, one of the biggest things, because
I think more people will purchase homes if the down payment wasn't a requirement.
Of course. Now, many times 2 to 4 units, people are going FHA because 3.5. But the problem is also what I always think of taking that next step is for a 3 to 4 unit FHA, 3.5. But there's something called a self-sufficiency test, which means that the mortgage payments for the entire properties, even the one you live in, 75% of that has to cover the mortgage payment. With rates being a little steep,
That's hard.
Right?
That's a high
hard.
rent.
It's
Yeah, yeah.
impossible. It is literally
Yeah.
impossible.
Because if you're looking at 4-bedroom, four unit, say $1 million, then
Yeah, your
you're
payment's
looking at
8,
eight,
easily.
right? So now you have to rent 3 units
Yeah.
for $3,000 essentially,
Pretty much,
$25
yeah.
to $3,000.
Yep.
And depending on the unit, if they're not 2 bedrooms and above, you're not getting that.
Yeah. So the one
So-
good thing is conventional never required a self-sufficiency test. So whenever I ran into a situation for a 3 to 4 unit and the agent, came up to me, I'm like, how's the rentals? If the rentals were tight, I had to make sure, all right, we'll check it. We got to make sure, does the client, we'll try to go 3.5, but does the client have the money? Do they have the bread to go 25? Because a lot of times it doesn't work. So the cool part, what I'm really excited for is that with this conventional investments, it has to be owner occupied. You must live in one of the units, but no self-sufficiency test. So that's going to be huge. That's going to be really, really good. Like I have an offer right now. Offers accepted. Old Bridge, 2-family. We went in. 15,
That's Jersey, Old Bridge, right?
Old Bridge, yeah, Old Bridge, New Jersey. We went in 15% down, 2-family. Offers accepted. Friday, loans already approved as of yesterday. Right.
Congrats.
15% down. 48 hours. Now, November 19th, I'm going to change from 15 to 5 and rerun DU. Client already knows this.
Right.
Now, the client's rate was locked on Friday when the market was rallying within the last 3 days.
You
which we can talk
could
about later.
do it again.
And then, well, she's protected from that day.
All the
So
way for
even if I
45 days,
change
right? I think.
Well, it depends. You could lock 30, 40, well, you could lock 15, 30, 45, 60, 90. We actually allow our clients to lock up to 180. Now, the longer you lock, the more expensive. it
Fucking
is,
work at
obviously.
end.
Yeah.
And you still got a rate lock.
Yeah, for real. But you get killed with new
See, New York, yeah, New York got hit with a bomb.
constructions.
Yeah.
New constructions. I mean, you're getting killed, but we'll do a lot of like 2-1 buy downs or 3-2-1 buy downs.
Yo. Let's not forget this about the reserve.
That's
guys.
what I'm. Yeah, right. You read
let
my
me
mind.
tell you. Let me tell you what happened, right? So, Citibank, fuck you. Citibank, right? I was getting my new home through Citibank. Citibank had a 5. Everybody had a 7.5. They gave me a 5 because I was I bank with them, right?
Yep.
And it was a jumbo loan, and I met all the criteria, credit score, everything. And then the reserves, right? They had to check the reserves. So they're like,
12 or 18?
What?
What they require, 12 months or 18?
No, so look at, so usually it's 6 months reserve.
Correct.
So normally, right, I'm thinking 6 months reserve just on the house.
Yep.
Nah, kid. They need to see 6 months reserves on all your properties, bro.
Damn.
All your property. So I had it, right? So I'm like, but why you need to see, 788? I just questioned because I thought it's 6 months. They were like, no. You see each home you have? We need another 6 months on top of those.
Sure.
So I was like, damn, holy shit.
And that's why the other.
What? No, what? The what?
That's why.
Well, we can't say this type of loan, but, Prime Mortgage doesn't like this type of loan.
So I'll tell you, the jumbo, each bank, it's kind of like more or less portfolio. So jumbo loans don't get sold on the secondary market to Fannie Freddie.
Okay.
So anything under Jersey, 1 unit as of right now, 2023, is $1,089,000. So if you're financing,
that's not a jumbo.
That's
not a jumbo.
Yeah, exactly. Anything under 1 unit, $1,089,000 is not a jumbo.
Right.
It's considered what's called a high balance conventional.
What do you think jumbos will be as far as rate in the next year? Year.
I just closed a jumbo in Texas. It was a 6.875.
Okay.
It was a 10-1 arm.
Oh, okay.
Yeah.
Just rate mortgage.
Yeah.
That's
Yeah,
what.
But 10-1 arm.
Meaning.
What's
10
that?
years he's in the clear at the same
And
rate.
then I got you. He
He's
probably
gonna
won't be in
refi.
there. Yeah, he probably won't be there
refi
either.
within 10 years.
Yeah.
That was actually my first arm mortgage ever.
Do you think he'll go into the fives? Like low, like 5
So if we're talking about the market, so
on jumbo?
yeah. I mean, listen, you're gonna have some type of institutional banks that take massive L's. Like I looked at your thing.
Yeah.
There's no way. Like but when you bank with an institution, they'll take an L on your mortgage
Just to keep you.
because you're gonna try to sell you on your Roth IRAs, on the CDs, on the savings, on the bank account, and stuff like that. You're a consumer that if you pull your bread, remember when you park your money with and again, I never talk ill. Institutional banks have their perks, brokers have their perks, and all that stuff, right?
Mm-hmm.
Just because it's being recorded, we can talk off mic on the reality. But you pull your money out, whether it's $5 or $500,000, that bank needs that bread. They need that $500,000 to stay afloat too.
Yeah.
Because when you put your money, right, look what happened. Silicon Valley, Signature Bank, earlier this year, they all fell under, and FDIC had to come in and bail out everybody up in Silicon. So some institutional banks from that standpoint will do it, but if they're competing on a day-to-day regular mortgage, we're crushing them all day.
Yeah,
because they don't have the room, they don't have the margins to take the L. And
I'm saying that because I got a 7.5 right now with Rocket. Why I keep saying Rocket Lawyer with Rocket Mortgage.
Rocket Lawyer lending you money.
With Rocket Mortgage, I got a 7.5, but I got to give it to them. They closed in 14 days. Citibank, they drove me nuts for I think about 120 days. Yep. It was just a terrible process, but it's a 7.5. And I think the minute it goes down to like a 5.5, I'm immediately refinancing, immediately.
Yeah, the minimum requirement is it's a 5% net tangible benefit from your principal. So say principal and interest, you're paying again a G, and now you're 5%. You need to save at least $50 to be eligible to refinance.
I spend right now $9,665 on the mortgage a month. I think if I get it down to a 5.5, I think I'll be at somewhere like.
Probably
78.
Yeah,
so John mentioned how he the reserve thing just bugged him out, and it's something that we all purchase properties. That's something that came up now, right? You mentioned an ARM, 10 years. That's like, why not just give them a regular rate? Because that's so long, and they know that eventually within the next 10 years they're gonna refi, so they're really not gonna get the big bucks off that potential client. My first home 20 years ago, young kid, didn't really know what I was doing. I knew it.
Wait, Dominican Republic, right?
No, I already had my social. I was born with it. So that was the only thing that was legit. That was the only thing that was right. So I probably had one credit card.
On the
credit score was probably
$15
like
house over there, yeah.
620, 630. I'm not sure if Florida has
He
something
fucking financed $15.
on an arm.
Oh, hey, listen, for all the Dominicans listening, I'm not coming at you. I just, we joke a lot, and, you know, he's Dominican, so.
John loves Dominicans, by the way, just FYI. So, he does. But back to that. Got into a first property was an arm. I didn't know the difference. I just knew that the interest rate was low, right? And I remember for that particular property, I would back out because they would try to change the interest right before closing.
Correct.
And once again, I'm a young kid. I thought I knew it all. Didn't really know much, but was kind of in the ballpark where I had an understanding. Fast forward.
He closed at 33%.
I closed that. No, I closed at a good rate. I can't remember exactly the rate, but it was before the market crash, 2004. Okay. 2007 comes, my mortgage tripled.
Sure. Yeah.
Tripled.
I believe it.
Didn't know the difference. I didn't know what short sale was. That was like a new term.
Yeah, but they're expecting when things like that happen. The banks
they were banking on it. They were banking.
I mean, so it comes down to the lender's follow up thereafter, right? And that's the other tough part, right? It's from many institutions, right? It's you close your deal. Are you saying deuces to your client?
Yeah,
or are you
he said deuces.
Yeah, 100%. Yeah. Many do, especially.
And the crazy thing is what I realized at the time, and looking back, I knew there was going to be an issue, you know, the Big Short and all that great stuff. I just, young kid, but I knew something was off where I met individuals that were making like $30,000 a year.
Sure.
And had 3 condos.
We're buying houses.
Right? And I'm like, hey, and I had to put 10% down because I was an out-of-state buyer.
Okay.
When the market crashed and everybody's just dumping their place, they're like, just dump it. And I'm like, no, I put like $40,000 into this place. How much you put down? They're like, 0.
Yeah.
Right.
So they only went in and paid probably like $5,000 for closing costs for a 1-bedroom
What'd
condo.
you do? You find out right now that house that you bought is worth $44 million.
No, but I do remember.
No, you didn't answer the question. I said, what would you do if you found out that house that you bought is worth $44 million today, right now? What would you do?
Go crack that lender.
Huh? Hey, I think the lender went to jail.
Probably. A lot
I
of
think
them
so.
did at that time.
But I think so. Florida too. Who knows?
Yeah.
Actually, points, right? You paid any points on that or not?
I know I did not. But
you didn't even fucking put down money. I'm just
no.
about
Yeah. Sorry, I put down my closing costs, everything. I spent $35,000.
I thought you said I put down my clothes.
No,
damn.
$35,000. I think it was like $38,000, almost $40,000 between closing costs and down payment and everything. Now my thing is,
so you bought down points or no?
No, it was just that was just closing.
Just par.
Right.
Yeah, I mean, remember the market. The market. We're talking about points. So why did I give that guy an arm? Right, it's my first arm ever, because I never was a believer in them. But this guy got a 699 score. He's buying a 1.6 in Texas.
Mm-hmm. Damn, that's a house.
That's a whole community.
Beautiful home.
Yeah, that's a house.
I posted it like 2 weeks ago. You just closed. 7.875 was costing him 2 points and a quarter.
2 points and a quarter, which is basically 2.25 of the total loan purchase.
Correct, of 1.6.
Damn, he paid like good 45, 50.
Easily.
Yeah,
so,
$50,000.
He has the bread, and he knows his credit's not perfect, right? You're at a 150, you're at 850, you're short, 151 points.
Yeah.
So I'm like, damn, how do I? And he'll take it. He found me on Google.
Oh, wow.
And I'm like, shit. I'm like, what am I going to do? I start playing around with it. And then I'm like, let me mess with some arms real quick. 5-year was horrible. 7-year was horrible. And then I looked at the 10, a 10-1. I was like, ooh.
What's a 10-1 just for the listeners?
So 10-year arm, and then it adjusts after that 1 point.
Okay.
And then you have a ceiling of what's called 5, which means it can only jump up 5 times.
Gotcha.
After the 10th year.
Per year?
Per year, yeah. So there's something, when you get an arm, it's an index margin and a ceiling. Index is what changes. It used to be called the LIBOR, now it's called the SOFR, secure overnight financing rate.
Okay.
And then you have the margin is the spread, right? For you gamble, what's the margin, what's the spread?
Mm-hmm.
And then the ceiling is the cap, right?
I definitely didn't have a ceiling.
So no,
I had a screw him, the screw him one.
But the thing with him is, like I said, the rate I gave him at an arm, he only paid like 3/4 of a point. So he only ended up paying, I think,
Oh, that's good.
rounded up, let's say 10 G's.
Oh,
As
that's
opposed
good.
to 40.
Yeah, so he might as well. Yeah.
So he took
Yeah,
it.
it's
Obviously,
better
he
to go
took it,
10.
and then,
Yeah.
the $10,000 is
Yeah,
tax
you
deductible.
fix
so
your credit over 6 months to a year.
Yeah,
Go back,
and
go
we'll
into
be fine.
convention.
You
Yeah,
know,
yeah, yeah.
I never got to see at $44 million, but I did get to see it at
Actually-
within like a year and a half. I had over 150,000 equity. When the market crashed 2007, it was dropping 10,000 a week
I believe it.
until it died. Right, 10,000. So you're seeing like, and I was ready to like refi pull. I was gonna invest in a business, and every week I would look 10,000.
Yo, life's tough. He was homeless after that for about 4 months.
That was no, actually,
he was fucking for stay.
You know,
Yeah.
I actually no. What I was,
Free
what I
dick here,
did learn
free
from
dick.
that was that I
Hot
should,
water.
instead of paying the mortgage, at the time was probably less than $2,000.
Yeah.
It went up to almost 4,000 because I still had cash flow. Like me personally, I wasn't doing bad.
Sure.
I would continue paying.
Yeah.
Where I saw everyone just jumping.
And then your
Jumping.
equity's going down.
My equity was going down.
on
I
the
was trying to until it got to negative, and at that point, what I should have done was just pull out and save all that money that was, and then I ended up moving to a nice place. Still
I told you you should have been with him, but you wanted to break up with him. You know what I'm saying?
I mean,
Nah,
listen,
but
that's-
actually talking about points though.
Yeah.
Can a client write off the points?
yes, that's actually the only thing they can.
Okay, and how do they write off the points?
So the best way to do it is
Hold on, give me 1 second. This is important. So everyone, where's the camera?
They're right there. You're right here.
Right here. Okay. Because this happens every single year during tax season.
Yeah.
Does not fail, right? You cannot write off your down payment.
Yeah.
Hold on. Wait.
Please, 'cause
I'm gonna put
this
you
is-
on. I don't know why this is making
What
me
you
share
just
it.
said is one of the most insanely.
No, it's happening so often.
Sure.
It's not just my clients. Is we have other tax partners. Just please, and you don't have to believe me. After I finish saying this, the expert is gonna respond.
Hold on. Go ahead.
If you purchase a home and you put down $50,000 or 30
It's
or
1,000. 1,000. Say it with a
20,
T, bro.
you cannot get that back. You cannot write this off. Right? Now, if you don't believe me, a gentleman right here.
So the only thing that is tax deductible from a home purchase is the points, the mortgage interest that you pay up front. So if you buy a $500,000 home and you pay 2 points, that's how much?
I didn't hear the price.
That's 4,000.
500,
You said $2,000 home.
$500,000 home.
Oh, 500 is
2 points,
10,000.
10 stacks, right?
Yeah.
$10,000.
Yeah.
So $10,000 is tax deductible.
Got it.
So the proper way to do it is 1, file your taxes with Truthful. 2,
Aha!
Number one.
2, you got to take your CD, your closing disclosure, your final closing disclosure executed, and take that to your account. And then they will properly guide you as to what needs to be written off.
Most of the time, the points though are located. That the points that you paid, if you paid, are located on the 1098 mortgage interest statement that you will get. The first one though.
Correct.
Okay, so the very first mortgage interest statement that you get, it will clearly say points on there.
Yep.
And
You gotta think.
it's not like you can put in a special field. It can only go in that box, and when you do that, actually, can you bring up the software, Al? I'll show the world what we're talking about.
Yeah, that's why. That's why we are. That's the importance of Truepod.
All right, look
We
at
just-
this. Can
we
you put
just-
look at me. I'm on the right.
We're not just gonna speak about it. We're
All
actually
right,
gonna put
all
it on
right.
the screen and show you.
Yeah. So look, actually, talking about points, let's go to the 1098 mortgage interest statement, which will be. I have it under test. Where are you, buddy? Right here. 1098 mortgage interest statement. I'm pretty sure you're very familiar with this.
Oh, yeah.
All right, so look at. You see right here where it says points paid. Look at, guys, points paid on purchase of principal residence.
Yep.
If you paid any additional money, like what we were talking about with points, it will show here on your very first mortgage interest statement that you got. All right. And look, unfortunately, this guy paid $10,000. Well, actually, let me make it his main home first, right? On his main home, it did nothing. So look, if this person made $190,000, right, with $10,000 in points, $41,000 in interest, and $12,000 in property tax, it did nothing as a write-off. Watch this. I'm going to wipe it out. Nothing changed, guys.
Yep. Nothing.
Absolutely nothing changed. But hold on. Here's the difference. Let's say that this was his
interest.
No, not even interest, but investment
property.
property. There we go. If this was an investment property, Schedule E, we have it as a test up there, right? So in this case, we can put the name of the street could be Ken's Little Feet, right? Ken's Little. It sounds like a real. Yeah. Ken's Little Feet, and Ken's Little Feet will walk in for 365 days.
That's in Beverly Hills, right?
Yeah. Ken's Little Feet. Now and then, let's say right here. All right, let's bring this up. The summary screen. This person made $190,000, and he also made $100,000 in rental income.
Yeah.
It should show 290 here when we do that, but the reason why it's not gonna so look on the 290, it already took in account. I'm sorry, no. I'm gonna merge it now. Sorry, guys. So when I go to the 1098E, I'm gonna switch it from main property. Sorry, test right here. Yeah. I'm sorry, guys. Don't kill me. I gotta find it. 1098. Here we go. I'm gonna switch it from personal home to investment property now.
Go to
schedule. Right? You see rental? I'm gonna switch it to rental income. And we're going to attach it to the Schedule E, all right? And now look what happened to his bill. Yep. No, but watch this. It'll be much more than that. It'll be much more than that because when we go to the Schedule E, let me move it over here. Look at this, guys. If we remove this,
37.
Let's say, so look at his bill's $24,000.
Yep.
It automatically imported the $45,000 in interest, and it automatically imported the $12,000 in taxes, okay? It does not populate the points though, okay? Because it won't let you actually take the points as a write-off if it was a business, but I'd rather take it like this and add in the rental income that I made because I'm barely paying that much of a dollar. So put it like this, guys. If you made $100,000 Al in rental income and this was your situation, watch the bill now. It's going to go to $37,000. So look it. This client is only paying $13,000 for $100,000 in income. You heard? Bro, that's only 13%.
And you could even you got the
and hold on, what's what? We can go even up. So because it went as a rental property, we was able to take the interest as well as the real estate taxes, and he only got taxed 13% of the money. Yeah. Me, if I would have made $100,000 at work, I'm getting taxed $45,000. Yeah. But now watch this. We can even go more on this.
Interest, insurance.
So watch this. You see depreciation?
Yep.
So let's pull up the calculator on the screen for everybody, right? Let's say this house was $500,000. The actual loan was $500,000. And if it was $500,000, we times this by 3.63 because that is the depreciation number, right? Times it by 3.63%. Where are you? Oh, yeah. It's my regular calculator. Give me 1 second. I'm going to pull it up here. You should be able to see it. All right. So we take the $500,000 and you times it by the depreciation calculation method that the IRS allows.
Yep.
And you're going to get $18,180 each year for 27 years. Well, 27 and a half. But look at this now, guys. So you take this, you add the $18,150 right here, and watch his bill go even lower. Did you see that?
$9,000. Yeah.
It dropped $9,000 for adding another $18,000 in depreciation. Mm-hmm. He can take that $18,150 of depreciation for 27 years. Now watch this, guys. On $100,000 in income, your man only paid $2,000 in taxes. Did you see that? You heard that? This is why, as a renter, well, not as a renter, as a landlord, you should not be afraid to report your income because most of it is being literally washed out anyway from the interest as well as the taxes, as well as minor other things that they can take back. You understand what I'm saying?
Yeah, so the main thing, we were talking about it earlier, right? You own a property. It's an investment property. What can we add back? Mortgage interest, which you're going to get the 1098. That's going to tell you how much you
Right.
spent. Your property taxes, your insurance, what you paid for hazard insurance.
Mm-hmm.
And then if it's a one-time repair, and that's where it gets tricky, can
Right.
you prove that it's a one-time repair?
Right.
When you're working with your accountant, keep an eye on that. 'Cause sometimes you're putting 15, 16,000. I say, what happened? Did the boiler break? What? Oh, no, it's just to upkeep the premise. We cannot add that back.
Right.
So that's my question. So in this particular case, I have talking about a client has a building. So concern is for refi purposes and things of that nature is expenses and write-offs.
Sure.
What is determined? So right now, if they're showing cash flow of like $10,000 a month, but if I include or we have to include these expenses, the one-time expenses, even if it's right, it wipes everything out, and she has zero cash flow essentially, because they're one-time expenses, you actually are good.
Yeah. Well, let me get that straight. So you're saying if they do the one-time expense, it's a good thing?
Well, it's not kind of against them technically.
If you could prove that it's a one-time expense.
Okay.
Like a boiler or a roof or
Right.
siding or anything like that, it's only going to happen one time.
Or for
right?
instance, typically people buy investment properties and then
Sure.
they dump 50,000, right? You do it all the time.
Yeah, that's one time.
That's one time, just
Right.
like a remodel thing.
Correct. But we
So-
want to make sure the other tricky part too that a lot of sometimes accounts, like you saw, it's as silly as it is, right? But you saw when you were filling out the Schedule E, and it said 365.
Yes.
How many days rented?
Go up there, Al.
And
Bring it on the screen. Bring it on the
Let's say
screen.
the property was never
All right,
rented.
he's talking about up here. So actually, we can change this, and you'll see how these numbers actually fluctuate.
Yeah.
So what he's saying, guys, is if Ken was renting, Ken's a weird landlord from New Jersey, right? And Ken is renting his home to Patricia,
Yeah.
and he decided to rent it for only 6 months out the year.
180, yeah.
All right. I want to show you something, guys. Nothing happened.
No. So, but my point, I wasn't talking about if
Mm-hmm.
it's going to affect the calculations. My point is, you're telling me it took you 6 months to flip the property or fix it.
Fix it.
Why is your account putting 365?
Mm.
So now I got to go to the accountant.
So go back,
and
Al.
I got to be like,
go back. So
I need you to write a letter saying, hey, it was a clerical error.
Right.
Which I do all the time.
So
It was a
what-
clerical error. I need you to
So
But
what's
yeah.
happening here is that a lot of accountants like to add numbers in to get the client a higher boost or higher return or
Lower.
less of a tax bill, not knowing that it's going to hurt him because it makes no damn sense. How can you, first of all, how you rented it for 365 days, but you only bought it 4 months ago?
Yeah.
yeah, that too.
What the fuck?
Yeah.
This
so-
is the shit that you see in the tax world.
And this is so we're talking about obviously the housing bubble, right? 2007, 2008 financial crisis. So this is the stuff that underwriters now are obligated to look at. Right now is the highest level of what's called mortgage buybacks. So, we're talking about FHA, you got to be 56, conventional, you got to be 45, credit score, you got to be 620, you get automated approval. There's a reason for that, is because if I do your mortgage with Gaunt Mortgages PRMG, your mortgage can get sold on the secondary market because I made sure it checked off credit, collateral, capital, and capacity, right? Now, we have to check a lot of that stuff. Underwriters, even mine, who've been working with me for a long time, are very particular for stuff for mortgage buybacks. So Fannie Mae's like, oh, you forgot to ask for this statement. Get it from the client within the next 2 months, or you have to buy the mortgage on your own portfolio.
What?
So it's the highest. If you search it, whoever's watching or whatever, loan repurchases is the highest it's ever been. And it's a combination, obviously, mortgage fraud, people doing fugazi stuff, or most importantly, the repurchases. So that's why, like, within your circumstances, we make sure that you check off all that stuff. Like, all the paper that's being written out right now is A+ paper. There's none of that fugazi stuff.
You see, I tell people from my experience, and everyone comes to me because of my knowledge in taxes and real estate.
Sure.
Right? And when they speak of the market crashing, I feel that it has nothing to do with the mortgage per se industry, because I see so many differences in my process before. See, I was around.
When you say the mortgage industry, what you mean by that?
So I know that when I purchased my first property, you still didn't even have a debit card. That's how long ago it was, right? But back then, and I know you purchased, a whole bunch of properties since, but when I was around, when I was outside, you still didn't even have a debit card. And I get it. That's why we're here. That's why it's so important for everyone
Your man had a Dominican debit card, and he's happy.
Yo, listen. This is why it's important to, like, watch this, because even John learns something, right? So back then, the process was so like
Bath and Beyond credit card, and now he's like, "What the fuck is wrong with you?"
It was actually a Macy's for $200.
Yeah, exactly.
I'll tell you right now. So back then, the protocols weren't the same, and I could see the difference, right? Like I said, my experience was like.
I'm gonna be honest.
So
I think you're solely wrong.
No,
because
back then was,
because
it was like going through flying before TSA. That's the only thing. It's like now there's so many protocols that he can. Even when we purchased, you see it now. The reserves, that wasn't flying back then. So the as long as your name and your social, you were good.
I think that a lot of these underground mortgage brokers, especially the ones that don't. They're looking for the dollar. They're not caring about the client. Mm-hmm. If they have the right loan underwriter and processor on their team, they can get a loan cleared. They can get a loan cleared.
I mean, listen, there's
still main items that they got to check off with Fannie Mae and stuff.
Yeah.
But they can get a loan cleared because I know personally 3 people that got that till today. I still don't know how they did it, and they didn't file their taxes, and they got a regular conventional loan. And I said, "There's
always gonna be fugaziness, right?"
Correct.
But I will 100% tell you that it got tighter. The regulations are obviously there. I teach it obviously day in day out. The regulations are only getting tighter, right? Dodd-Frank Act came out. Like what's happening right now on the real estate side with the NAR lawsuit and all that stuff. Mm-hmm. We went through that. 2008, 2009.
Correct.
With the Dodd-Frank Act, with the SAFE Act. Like, everyone who's talking about the NAR lawsuit and the Anti-Sherman Trust Act and we don't know what's going on and who's going to pay the buyer's agent and all that stuff, we went through all that. You know, lenders did not have to become licensed and go through my school and get formally licensed and take a state exam until post-financial crisis.
Right.
And a lot of people exited the business. Just like now. Realtors are leaving every 3 seconds. Lenders are leaving. 50% of the business is out. And
why are realtors leaving?
Because, dude, it's tough.
They can't close.
They can't compete. Brokers obviously have to charge their typical dues. So whether it's monthly dues or they got to charge, your MLS fees and all that stuff. Yeah. So it tacks up. But again, if you're doing 1 deal or 2 deals every 6 months, you shouldn't be in the game.
Yeah.
You got to surround yourself with the right partners. Again, not just lenders and realtors, but other referral partners and stuff. But on one topic I want to talk about too, we're talking about the a lot of the different regulations. It's a lot different than before. Where if you didn't meet checkbox of credit, income, this, that from a traditional mortgage perspective, and you cared about your portfolio and you wanted to make sure HUD wasn't on you too, because we get graded too on delinquencies. Yeah, like HUD. Right. If a client is delinquent, HUD says, "Yo, what's up?
What's up? You have 20 delinquent clients."
It happened to me in 2021. 6 clients around April of 2021 all put COVID deferment. So then I get an email from my COO, and he goes, "Yo, what's going on with these clients?" And I'm like, "Dude, it's COVID. Yeah. It says COVID. The media's telling people to not pay your stuff and defer your things."
But
I got dove in, like they investigated the whole internally with the company. 6 different agents, 6 different locations, 6 different attorneys. So I'm
but you know what? If you did your due diligence to get the loan for them, and it met all check marks that they issued and wired the money to the seller's attorney or buyer's attorney, then I feel you're out of the clear on that.
You're not.
I said I feel.
Yeah, 100%. So do I. But we're still on the hook post-closing, too.
For
First
how long?
payment, 6 months.
6 months.
Yeah. So right now is that sweet spot where rates are starting to trickle down. You got to look for something called EPOs, early payoffs. So, we were talking about your refi where you got to at least save 5% net tangible benefit.
What's that?
So your principal and interest. So remember we were talking like, you got to make sure you're saving at least 5% from your net tangible benefit to refi.
Mm-hmm.
So rates on Tuesdays.
When you said saving in a bank account?
No.
Saving from your monthly payment. So check it.
Oh,
So
got you.
your
For it to be
principal,
worth
your-
it. I
correct.
got you.
For you to even do it.
Yeah,
Not even be worth it.
yeah,
Do it.
yeah,
Because there's a lot of cats
yeah.
out there that
I think
will
on
refi.
jumbos, that's easy.
100%. The
Yeah.
bigger the loan amount, the easier
Yeah,
it is.
yeah.
But
yeah.
Tuesday, rates were over 8. They were like 8.125.
Tuesday?
Yeah.
Last Tuesday.
The fuck?
Friday, 7.4.
Wow.
So it was a big drop. It was the sharpest drop in a long time because it was employment week. JOLTS report, which is job openings and labor turnovers, came in very, very low. Less jobs being created.
Mhm.
Wednesday, the Fed paused. Thursday, we saw initial jobless claims came in the highest that they've been in 8 weeks. A lot of people are applying for unemployment. And
Yeah.
then Friday, the lowest number of also job openings with the Fed, with the BLS. So good data, rates
Drop.
drop. So that's the thing. So two things I've
So if he was to come off of unemployment, we're good, right? Like we might save a whole.
so
Oh, so hold on.
2%.
So like a little recap. I have a porn business, OnlyFans. I have
you
a
got
40.
Dominican credit
I have
card.
a Dominican credit card. I have no social. I have a couple of businesses, a $44 million house,
and, you got
and I'm in
got-
unemployment.
and you got on your first house.
And I and I have an arm that I still have PTSD.
Damn, you did
I
a
had
whole
a rough
summer. Yo,
life,
you know
man.
what? Sometimes I don't be noticing all the shit that I be talking on this side.
I need a next guest is a therapist.
Yo, but
I'm
you
telling
know what
right
though?
now.
You know what though? Look it, we've been chatting. We can keep on and we are, but we dropped 20, 30 minutes of bombs. You know, straight great info. But then we summarize how he's a legal resident of the United States. You know what I'm saying?
With 4 mortgages, 6 successful businesses, and the OnlyFans.
Yeah.
Wow, my mom will be so proud.
But those are the two things that we're really looking at right now.
I
Inflation,
actually learned a
people
lot
spend-
today. You know, right?
People
Yeah,
spending,
yeah.
People spending less money, inflation, which is why the Fed paused, and then employment. Because the Fed needs to be careful right now. We're heading into that recession, which is good for us.
So let me ask you, real confident. If your life depended on it, do you think we're going into recession? Yes or no?
110%.
We're in it right now.
110%.
Question wasn't for the Dominican non-resident. It is for Abdel.
In DR, there's a recession.
There's been a recession for 44 years over there.
I never.
Well, in the U.S., we're in a recession.
Nigga, there's
John.
like 3 houses in DR. What are you talking about?
So I
Talking about
never
that
used to-
recession.
My wife and I will go to Costco or whatever, right? When you're a cop and stuff. And I started noticing. I started noticing
Gross domestic.
orange juice, right? Like an orange juice. Like
Oh, yeah, forget about
Tropicana.
it.
They used to sell 4. And I never look at the price because I'm just, you just grab, especially when you're there. So there used to be 4 in a pack. Now there's 3.
Oh,
My
shit.
kids mac and cheese, right? I remember used to buy and it always used to say 18. Now it's 12.
Yeah, that's
I'm
called
gonna imagine
something.
the price. Yeah, well, it's supply
Called
and demand.
stealing.
No. Not a supply and demand. There's a, and I mentioned it to you how like potato chip bags have less.
Yeah, they're tight.
So it's something within their
It's
packaging.
so the supply chain management.
It's called.
Well,
the,
you can-
tighter.
It's called the Dominican Act of 2024.
So to be honest with you, it's something that technically they're getting sued now, like
Sure, yeah,
because
I mean-
they're doing that. So they're packaging less and obviously keeping the same price or
Same
increasing
price.
the price.
So I only talk about that from a personal perspective. Now let's talk like data, right? Employment's cracking, and this last week was the first time we truly saw that employment was cracking because for so many months we got false data, where you're like, oh, there's so many jobs out there. Oh, there's a lot of people filing unemployment, and how do we know it was false? Like, I'm not making it up, is because every single month they have to revise their numbers. And then every month they revise, they're like, oh, sorry, we made a mistake.
How the fuck
And
you make a
it's
mistake?
so messed up. Oh, there wasn't 320,000 jobs created. There was only 160. And you're like, dude, that's a big
That's
difference.
a big number.
Yeah.
So eventually it all started getting caught up. Now, what are we heading into next year? An election.
It's called line by omission.
So whenever you go into an election now, who's going to come and save the day?
Yeah.
So it's a lot of that stuff. But if we could keep up the data that we saw this past week with rates going down,
Do you think that
we'll
the
see.
people putting in the data were Dominican?
Hey, you never know. You never know. We We've accomplished a lot in the last 30 years.
¿Qué?
No, but question.
Se jodió.
Now, once again, I don't think that the mortgage industry, like I said, I think it's no longer the Wild Wild West. So there's no one making $30,000 with 3 properties. That's not happening. I remember that. I personally knew this person, right?
Nah,
That's not happening anymore.
I honestly
right?
think it's hard to make a profit on rental income now due to the mortgage
Being so
interest rates.
Yeah,
Right.
100%. I mean, your ROI is less, but I mean, I do 10, 15 transactions, investment only a
But
month.
at the time,
And
Right.
and I tell the investor, because most of them are not just traditional, right? We could hold a whole nother podcast on DSCR, bank statement, P&L loans, and stuff like that, right? But I tell them, you cannot think about what is your ROI per month. It's what is your appreciation that you're copping a house right now for $500. It's going to be $7.
Yep.
That's $200,000 of.
Yeah,
So that's what
Al, can you bring up the
so that's what they were doing.
the laptop real
That's
quick?
what they were purchasing the first condo.
Yeah.
My personal condo had $60,000 in equity within the first 4 months.
Yeah, I believe it.
Right. So they were pulled with a 70%, 75%. That's 30,000.
Yeah.
Buy another one, and now
I
they're
got you.
so that's how they were doing it. But if it comes down to technically, if it was now, they would need a reserve, right? They would need a reserve. XYZ, boom, boom. They're only making their job was $30,000 a year, so that's
You
no
ain't getting
longer the
nothing
case.
now.
So I don't think the market crashes because of the mortgage industry. There's
Nah, that's much more protected.
it's
now.
way more protected.
Nah.
Now, if you drop the interest rate back to a 4, I think that would do damage.
So what's gonna happen? So like this morning, CoreLogic and Black Knight, which are the 2 largest, essentially data points that track home values and home appreciations. They both came out showing that home values are still on pace to doing 5 to 8% appreciation.
Yo,
From what we
please
saw,
bring my computer up now because of that. See, he said 5% appreciation.
and that's like talking on a national.
But we're going to what you just said, depreciation. Now I'm gonna go back a little bit about 2 minutes ago when you said you're not in it for really the cash flow a month,
Correct.
but more for the
appreciation
appreciation.
of the value.
So watch this, guys. I own a property, and I'm gonna do the numbers like this. All right, I own the property for $220. Right, I cash flow every single month. So watch this. I had to put down 20%. Minus 20%. My mortgage is $176. On $176 with taxes, everything in, my mortgage is $1,245. It is. That's what it is right now. I rent it out for $2,100. So $2,100 minus
700.
minus $1,250. Let's put $1,250. I cash flow $750 a month, right? That means positive. Watch this. Times this by 12. I want to keep adding to this though, guys. That's 10,200. But let's not forget. Let's hold this number now, right? Watch this out. Everybody, this is very important that you watch this, and this is why investment property income, if you're cash flowing, is great because you're not looking more for the cash flow, but the overall situation. Now, watch this. On $225,000, you times this by how much you said? 5% appreciation. That means your house is appreciating. It's going up in value 5% a year.
12 grand.
Watch this. That's another 11,000. Al, watch what you're seeing on the screen right here. So now, watch this. Oh, it gets better though, Al. Check this out, Al. Check this out. So on one calculator, I made 10,200 profit in rental income.
Yep.
On the next calculator, I made 11,250 in appreciation on the value of my home going up. But there's more money, Al, and people don't see this. And this is why I buy homes. Now watch this. I'm going to go to a calculator again. We're going to pull up one more. Now you take that same 225 home, and let's say, matter of fact, you take the payment, $1,250. Out of the $1,250, $190 of this is going towards principal. Watch this, guys. 190 times 12. That's another $2,280. Now, when you add all these numbers up, plus 11,250, plus 10,200 equals $23,000 a year that I'm making profit. I'm going to steroid this, right? Because this is my plan. 22,730, right? Bro, that's per year for a $200,000 house for only $1,100 a month. You know what I'm saying? Yeah. So watch this. Watch this. I buy 10 homes. You ready? 10 of these.
Yeah, you're at
Where am I? I'm already making $250,000 a year.
Yep.
So imagine when John does what he does, and I got it at 50, 60 homes. Now you times this by 5, okay?
You're over $1 million.
And I make this a year, $1.1 million a year, literally between appreciation. Why you think every 5 years I can pull out a easy $3 million like this? I can pull out $3 million.
Show me the money!
You see that? And these are props. So if I was to say, yo, don't. Most people are gonna be like, wow, that home is ugly. You know, it's $200,000. It's ran down. I go, well, I'm gonna make $850 profit a month. 850 profit plus 5% appreciation, plus my loan going down on the payment. Cool. I'll make close to like $25,000 a year. I get 10 of these. It's $250,000 a year. I make that's $25,000 a month. You know what? I can go buy 2 mansions with this.
Yep.
Bang.
Yep.
You with me? That fast. And we'll get into the type of loan that is.
Yeah, right.
So yeah. So
I mean, you could do a regular convention with that though.
100%.
Yeah.
I mean, listen, there's a conventional, and typically self-employed borrowers. We talk about it real quick. I don't know what time we got.
Yeah.
But
I just want to before we wrap up, I want you to and then you're getting to this, but what programs? Because it comes down to programs. What kind of programs for, say, 2 programs for self-employed and 2 programs for W-2?
Yo,
Yeah.
man, I know we've been joking about Dominicans all day. We're gonna go right into the program, but do you need a social security number to purchase a home? Because I know a lot of Dominicans don't have.
Yeah.
so
I'm lighting him up this show. I'm sorry.
No, it's
guys.
all good.
No, but
It's
real.
all
Do you
good.
need a social security number in order to?
for a traditional mortgage,
To a
conventional
traditional
FHA,
mortgage.
You need a social.
yes.
Yes.
But
All right.
we have like IT.
You have
loans.
you have IT.
Yeah, we have
You
IT
fuck, bro.
loans.
You fuck.
That's how it is. That's how you get them with the IT.
Now, if you don't have a social, there's many different programs.
Yeah.
Or if you do have a social.
Question: How
there's
do you
programs.
do for John's Indians family? How do you get international buyers? Are they mostly cash?
Yeah, for the most part. So like I had one situation, the client was working for Qatar Airlines.
Qatar, yeah.
That's your uncle.
Yeah. Qatar Airlines working over there. Moving to Jersey.
Okay.
I got his transfer paperwork that he was now moving to JFK, working for Qatar Airlines.
Okay.
I got the offer letter and a confirmation of the continued likelihood of income, and I qualified him regular conventional mortgage. But again, it's strategies, right? Now we talked about programs, right? We went FHA, conventional, that's your standard typical loans, right? Now on the non-traditional side, it's literally called non-QM loans, non-traditional mortgages. You have all these goons on social media, right? Talk about them, but they don't know how to do them. DSCR loan, which
Right.
is a debt service coverage ratio loan.
Gotcha.
Has to be bought as an investment property.
Mm-hmm.
It has to also actually cash flow.
Yep.
So it's either on a 0.75, 1, meaning has to cover the mortgage payment, or 1.25, meaning the rent roll comes in and then some on your payment. Every investor, they're all private too. There's no regulations involved yet. I know there's a lot of slowly just trying to get some regulations involved because you could have a rate on those like 16, 17%. Essentially hard money. Yeah. I'm doing one right now in Sparta, mixed use, 6.75. It's actually better than a regular QM mortgage. I got another one in North Haledon, single family. He did not file his 2022 taxes yet. He comes, he's like, how should we strategize and all that stuff? And I'm like, well, let me tell you, you bought a house with me in 2021 in Kearney. You're buying now in North Haledon. Why don't we do a DSCR loan? Your rate's going to be better, I guarantee you.
Do you do DSCR loans?
Absolutely.
Oh.
Yeah. So instead of us... Now, the cool part, too, with DSCRs,
Hi, Abdel.
there's a lot of different...
You're my new best friend.
There's a lot of different outlets, too. So PRMG, we've got great programs, great partners, but there's a lot of real... But like I said, it's kind of the wild, wild west. So you have various different investors that are okay with assuming a risk, right?
Got it.
So that's a DSCR. Basically, rent has to cover it. A lot of our self-employed borrowers, besides the 5-year that we talked about, 1 year conventional that you could file your taxes, there's bank statement loans.
That was my.
Yeah,
a
these
lot
things
of
are dangerous loans, though, right?
Yeah. Well, not really.
Not dangerous, but they have heavy costs associated with them, right?
I mean, listen, non-QM loans, take a look at it this way. I always explain it to a client because we'll look at it comparing apples to apples. That consumer right there who was, I think it was $230 was their gross, they have to pay back $27,000. And that was after giving them love.
With the depreciation.
Like that, right? 27 stacks. Now, if you're a client who you can strategically file, right, with your accountant, and I say that word purposely, you strategically file, you don't have to pay 27. Let's say you pay 5. So now we're saving 22 stacks. $22,000, and I can give you a mortgage, even if the rate's a little higher. If you're saying costs associated, right? If the rate's a little higher, if you're going to pay points, say it's a $500,000 home, and you got to pay 2 points. That's 10 G's.
You're still saving 12.
How much is the bread here? 22. So now I got 12.
Yeah.
Let's say your monthly payment also, it's going to be higher, right? Your rate's higher. Let's say it's $200. I got 12 here. That's 60 months. 5 years. What's the property going to appreciate? How much you were making on a $200,000 home? You said 25.
Yeah.
This is essentially 2.5 times that. So you're making 75 stacks off of 12.
Yo, you want to laugh, son? Yo, time out. Bring up the screen again. All right, so look at calculator. Check it out. So I bought my last home for $1.585 million.
Yep.
Right, guys, look how crazy this is. Watch this. Times it, and by the way, the national average is about 5%, but certain areas go crazier. All right, it's a hot market.
Yeah,
over there.
yeah. That's what I was saying. Nationally,
Yeah.
Jersey, we're easily seeing 8-10%.
So watch this. Watch this, guys. My home right now, if we take the 8, because I know it's definitely doing 8,
easily.
right? 8% every year.
Yeah.
My home is going up $126,000 in appreciation. Now watch this. Watch this. Let's dumb it down just a little bit. All right. Let's go with the national average of 5%.
Still 75.
My home is going up. Let me break the science down even more to you guys, and this is why buying a home is a must, bro. Because you think that it's a heavy cost up front, not knowing you might be sleeping there for free. No. So watch this. You divide this by 12, Alex, a month. By 12 months.
It's your monthly.
$6,600. I paid $9,600, and that's only because I have a high interest rate right now. So watch this. If I was at a lower interest rate now and I was paying $7,800,
you'd be living there for free.
But put it like this. How much is my house costing me right now to live there? Right now. Think about this. I pay I'm only paying $3,000 a month to live in a nearly a $2 million house.
Yep.
You with me? Are you with me?
I'm with you.
But am I? Nope. I'm actually paying less, bro, because my payment, right? $1,900 of my payment.
It's going towards.
Well, actually, $1,450 is going towards my principal. So now you add another $1,450 to this, and I'm literally only fucking paying $1,600 a month to live in a $2 million house.
Yeah.
You heard me?
You've come a long way from.
You heard me?
It's magic.
And now watch this. Wait till the rates drop to a 5 or 5.5. I'm going to immediately refi, and I will be living in my home for free monthly.
Yeah.
And look at you. Just got your debit card. You learning, bro. You learning, man.
Good shit.
Came a long way from cashing his check on the west side.
But, yeah, I mean, listen, that's where it's at. So, clients out there, people are buying. I mean, people are buying left and right.
Damn, I got to pick up this call. Hold on 1 second.
Press pause.
Yeah. No. Don't press pause. Don't.
You good? All right. So what were you saying?
No, he doesn't have his green card. He does not have his green card.
Great.
Hey.
Yeah.
But people are
I'm gonna come back with a shirt. Got green card. That's my next episode.
Nah, this is good. Yo, I actually learned. I learned a lot. Yo, we're gonna have to cut this one short. Obviously, I know Abdel, you got a couple other podcasts you got to attend today.
Yeah.
And I'm trying to get him his. I
have an appointment at Social Security.
He has an appointment at Social Security. But no, this was great, man. We'll be able to chop this up actually into several different clips that we can use on Instagram, you know, just for more, just chat purposes, like knowledge, you know. This is what we do. We're both we own two very big knowledge-based teaching companies, right? And most of the time, it's free, right? The knowledge that you drop is free. So with that being said, let's keep giving people the free gems that they need, actually need to know. Not that you care to know, but when you're going to care is when you're in need, all right?
Correct.
And when you're in need is when you go buy that house. You need to know this information. So right now you may not care, but this is great information to have. So when you're ready, you can always refer back to this and go, you know what? This is why I should buy a house. Don't be afraid about buying a home because of the interest rate right now.
No.
Because I'm going to tell you right now, guys, and I'll look at you dead in the camera and say this. The minute the fucking rate drops to 4%, you ain't going to be able to buy a house because the whole fucking world is going to be buying a house. You need to buy when people can't buy.
Yep.
Correct.
Remember that. All right?
Yeah, I mean, listen, 2021, floodgates, you're offering. I bought my house down in South Jersey by the shore. We offered $60K over, 7-day closing, literally. Had the seller stay there for 2 weeks.
Yeah.
House then got appraised 70 over, so we're in the clear.
Oh, wow. Good.
And
Which is good. That means the 60 you didn't have to give over.
Nope.
Because it
No.
It
And
fell
I
in the
got
mortgage.
fluffed 10. I mean, the house now is worth easily over $1 million down the shore.
Yeah.
Which is, you
Yeah.
already know, up here would be crazy. But we're going to get back to that, and it's probably going to get worse because back then, at least we had a little bit of supply. You talked about the bubble. There was 4 million homes available at that time. Now they claim 1 million. It's a lot less. It's probably like
it has to be.
I tell you right now, the Jersey market is minimum. We're in every single industry, and it's bad. And this was bad last year. So, like you said, it's now. Don't wait. There is benefit to it. Just understand that you're, budget those extra $2,000-$3,000 for next 2 years, and then you're out of the clear and you have your home. Exactly. So it's important, man, and
Good stuff. Good stuff. Definitely good stuff. We're definitely going to be doing another show. Obviously, because we know that there's a lot more information that we could have touched on.
Oh, yeah.
But for us not to first, I don't want him to get deported.
I need to go like ASAP. I need my social security card like ASAP. We need to go.
Nah. This is good. You know it is. Ken's a good sport. You heard? Some people just can't take the jokes, man. And if you can't take the jokes around me, you're not gonna be around me, man.
No,
man.
I love it.
But yeah, you have to. You have
Good
to.
shit.
Proud. I don't have a social. He doesn't have a debit card. We work together.
All right, man. This
Nah, good
looks like
stuff.
we got another one wrapped up here at True Pod Studios. Abdel, thank you for coming through, man. Definitely, again, feel free to shout out your social media pages, your YouTube channel.
Yeah.
We'll go ahead and put up the emblem up there, PRMG Got Mortgages. Question, why the gorilla?
Have you seen him?
Have you seen this motherfucker?
No, it is branding at its best.
Yes.
People look at me and people look at me, and it's the gorilla. And we're defending our flock. I'm pounding my chest and saying, "What's up?"
Okay,
Oh shit! That was rehearsed. He used to be
That's
a
fire.
rapper.
That's fire. You need one of those.
That was
a
the
rap
slogan.
verse?
Like a slogan.
Yeah.
That was the slogan.
Rawr.
All right, we're big cat, big cat.
Lion, nigga,
Alright,
big
so-
cat.
so-
like Robbie says, right? That's a big cat.
Big cat.
Meow. Yo, so that's you said Got Mortgage.
GotMortgages.com.
That's right.
Socials got_mortgages. The school is gotoriginator.com.
Got it.
Yeah, check it out.
And then you
Alright.
have John at Truthful Taxes.
Truthful Taxes, but most importantly of all, one of the coolest shows out at Truepod. All right? At Truepod.
Follow.
All right?
And then you catch me at Mr. Kenneth J. At
And
Kenneth
that's
Taxes.
your nearest Social Security office.
He's a Broadway. At
Oh, yeah.
your
well,
local, at your local Social Security office. See you guys.
All right, man, we're out of here. It's a wrap.
Just don't provoke me, cause I don't need no cellmates. I'm in a 2-seat, doing drops like a mailman. This ain't no hoopty ass, she riding, she's a hell yeah. No, I won't lose sleep about no pussy, I'm like farewell. Yeah. I'm outside. I know how it feel to see your homie switch sides. I know how to put that Rolls Royce shit in drive. I know how to load a clip and shoot, we gotta ride. You ain't gotta lie to me, baby, no. You know it's a vibe every time we catch him off sides, he won't make it, no. Money on my mind, I can't get it all. I've been